Welcome to the Capital Projects Fund, part of ACC 240. You've been through a lot. We're in Chapter 7 now. And Capital Projects is another government fund, like your General and Special Revenue Fund. And the Capital Projects Fund is a way for the accountants to capture the revenue to construct or purchase a major long-lived capital facility or a piece of equipment. Now, in Wake County Public School System, what's going to be a long-term capital facility? What's going to be an example of that? Building schools. I want to emphasize that these expenditures do not necessarily have to be made in the Capital Projects Fund. For equipment such as, let's say, cafeteria equipment that would be purchased in an enterprise fund. We're going to study that in just a few weeks. You could purchase a car, or the government agency could purchase a car that would be could be purchased in the general fund as well. In the Capital Projects Fund, the expenditures are realized through the modified accrual method, as we discussed in Chapter 6. Typically with the General Fund and the Special Revenue Fund, we talked about budgeting 1 year at a time. With Capital Projects Funds, typically it takes longer to build a school, for example. So these will be multi-year budgeting for the Capital Projects Fund, budgeting over several years. Now, in Chapter 7, you're really focusing on the journal entries for the Capital Projects Fund. There are many similarities. You'll start out with the budget entries, exactly the same as our General Fund and Special Revenue Fund. You'll go to the encumbrance entries. We're encumbering POs. We're issuing POs to contractors, to architects. It's going to be for a lot of money, but it's going to be the same journal entry that we experienced in, as we discussed in the General Fund. Okay, there's an entry, and I will try to get to some differences here. There's an entry early on in the chapter where the government entity is doing some short-term borrowing, just for a matter of months. In that case, when they receive the cash, they would debit cash, and they're going to credit a liability on the balance sheet. This is for short-term borrowing. Debit cash, credit a liability on the balance sheet for the Capital Projects Fund. Now, let's move on to a bond issue. In our example in the Capital Projects Fund chapter, excuse me, we receive bond money. The Capital Projects Fund with debit cash. Whenever you get money, debit cash, and you need to memorize that. That's a very important concept in financial accounting as well as governmental accounting. Okay, with this bond receipt of cash, we're going to credit the other financing sources account. The credit will not be on the balance sheet. Listen to me very carefully. The credit portion of this journal entry will not be on the balance sheet in the Capital Projects Fund. Debit cash, credit the other financing sources. And there may be a premium or discount involved with that. In the chapter there is a premium, and that also shows up through the other financing sources area or account, which will appear on the Statement of Revenues and Expenditures for the Capital Projects Fund. Since the bond is not set up in the balance sheet, where is it? It's going to be in the long-term liability accounts. And the long-term liability accounts we're going to study several weeks down the road. So don't worry about that yet. just know that when a bond money is received in the Capital Projects Fund, you're going to debit cash and credit the other financing sources account. Okay, as you continue through the journal entries in the Capital Projects Fund chapter, you're going to see many similarities, many things similar to what we saw in the general fund. You're going to be purchasing materials. You're going to be paying a contractor. You're going to be realizing expenditures throughout the course of the project. You'll probably have some payroll expenditures as well. Really nothing unusual. I do want to introduce you, though, to two terms: retainage and arbitrage. Retainage and arbitrage. And first of all, we're going to talk about retainage. You can see that in the chapter. What the term means is, whenever we pay a contractor who could be building a school for us, for example, the school system will hold back a certain amount of money that they are paying that contractor. It is called retainage. Typically, it is either 5 or 10%. It's some percentage. Your book uses 5%. Wake County Public Schools would hold back 10%. Why hold back the money? Well, the contractor has got to go through and have the building inspected. Certain things have to pass the inspection from the government entity. And in this case, it would be Wake County or City of Raleigh, or wherever the school is located, what municipality where the school is located. If certain things do not pass inspection, the contractor could just walk away from the project. If that happens, Wake County Public Schools or the government entity has retained money, in this case 10%, or in the example in your book, 5% of what is owed for those projects. That retainage is kept in a liability account, similar to accounts payable, but you'll see it as retainage listed in the journal entries in the book. It's holding back certain money that will eventually be paid that contractor once everything is completed. Okay, here's the second term I want you to know and memorize: arbitrage. Arbitrage. Sounds French, doesn't it? Arbitrage. Arbitrage. The government entity is going to request funds from the bond issue. Okay, this is the long-term financing through a bond issue. The government entity does not want to request funds ahead of time. If funds are requested too far in advance, that cash will be sitting idly, or it may be invested, and arbitrage occurs. The funds need to be requested as the contractors are paid and not ahead of time. Arbitrage, retainage, two new terms in Capital Project Fund accounting. If you have questions about anything in this chapter, please do not hesitate to get in touch with me. I look forward to hearing from you and appreciate any questions that you may have. Also, utilize the discussion board for posting any questions. Your fellow students can certainly give answers in the discussion board, and I appreciate the participation there.